As of 12:44 p.m. Eastern Time on September 11, 2025, BigBear.ai Holdings Inc., trading under the ticker BBai, is currently priced at $4.88, reflecting an intraday gain of 3.17%. The stock is showing significant volatility today, having reached a high of $5.09 and a low of $4.695, with a staggering volume of over 43 million shares already traded. This surge in activity immediately draws our attention, suggesting that something more profound is at play than just routine market fluctuations. The expectation for a small-cap AI company like BigBear.ai might be to ride the broader waves of the technology sector, but the reality of today's movement, coupled with recent corporate developments, hints at a narrative that is both complex and intensely scrutinized by the market. Many investors see the .ai in the name and immediately categorize it with the high-flying success stories of the artificial intelligence boom, anticipating exponential growth fueled by broad sector enthusiasm. However, the reality of BigBear.ai is far more nuanced, deeply rooted in the stringent and often opaque world of government and defense contracting, a reality that presents both a formidable moat and significant, unique challenges. The prevailing belief is that any company with a credible AI offering is on a trajectory to the moon, mirroring the meteoric rises of giants like NVIDIA. The chatter on forums and social media platforms often paints BBai as a smaller, nimbler player poised to capture a significant market share. This expectation, however, clashes with the harsh reality of the company's recent financial performance. The second quarter 2025 earnings report, released on August 11th, was a stark wake-up call. The company reported a significant earnings per share miss, coming in at a loss of 49 cents per share, wildly divergent from the analyst consensus that had anticipated a loss of only 0.06 cents. This wasn't a minor misstep, it was a chasm between expectation and reality that sent shockwaves through its investor base. Revenue also fell short of expectations, highlighting a critical disconnect between the company's potential, as perceived by the market, and its actual execution in converting its backlog into tangible top-line growth. This forces us to ask a crucial question. Is BigBear.ai a genuine AI powerhouse temporarily grappling with execution, or is it a company whose potential has been inflated by the sector-wide hype, a concern that some analysts have voiced, comparing its growth unfavorably to the government sector expansion of behemoths like Palantir? Many investors using platforms like Fidelity Schwab Intelligent Portfolios and SoFi Invest are trying to parse these very signals, deciding whether this is a dip to buy or a sign of deeper issues. The daily stock movement reflects this internal conflict. The high volume and wide intraday price range suggest a battle between bullish speculators, perhaps drawn in by recent partnership announcements, and bearish realists, anchored by the latest earnings miss and subsequent downward revisions in financial outlooks. Institutional activity adds another layer to this complex picture. While there has been a notable increase in ownership from major players like the Vanguard Group and BlackRock, who have significantly upped their stakes, there has also been considerable insider selling over the past few months. This divergence is telling. While large, often passive funds are increasing exposure to the AI sector as a whole through companies like BigBear.ai, the insiders, those with the most intimate knowledge of the company's operations, appear to be trimming their positions. This presents a classic dilemma for the retail investor trying to self-invest online. Do you follow the big money inflows from institutions that might be making a broad sector bet, or do you heed the warnings implied by insider sales? This is a critical consideration for anyone managing a portfolio on platforms ranging from interactive brokers to Robinhood. The dilution of shareholders over the past year, with a 48.2% growth in outstanding shares, further complicates the investment thesis, as it puts pressure on future earnings per share and can cap upside potential. To truly understand the tension at the heart of BigBear.ai, we must look at its core business. The company provides artificial intelligence and machine learning solutions, primarily catering to the defense and intelligence communities. This is not the consumer-facing AI of chatbots or image generators. This is high-stakes, mission-critical AI designed for decision advantage in complex operational environments. Its clients include various arms of the U.S. government, for whom it provides predictive analytics, computer vision, and other advanced capabilities. This government focus is its greatest strength and its most significant vulnerability. On one hand, it provides a stable, albeit slow-moving customer base with long-term contracts. The company has announced a series of intriguing partnerships and deployments, from integrating threat detection systems with Smith's Detection for airport security to collaborating with de facto AI for military readiness, and even a landmark partnership with the Washington Commanders NFL team. These deals create an expectation of rapid commercial expansion and revenue diversification. However, the reality is that revenue from these ventures takes time to materialize and often pales in comparison to the large but lumpy government contracts. The sales cycle in the federal space is notoriously long, and while the company boasts a substantial backlog, converting that backlog to revenue has proven to be a persistent challenge, as evidenced by the recent earnings report. Looking back, the company's history shows a pattern of volatility and a struggle for profitability. Since its public debut, the stock has been on a roller coaster, far from the steady upward climb of a blue-chip stock like Apple. While the promise of its technology has always been a powerful narrative, the financial reality has consistently lagged. The company is not currently profitable and is not forecast to become so within the next 3 years. This is a critical point of friction in an economic environment where investors are increasingly prioritizing profitability over growth at all costs narratives. The enthusiasm for AI can only carry a stock so far when the bottom line remains firmly in the red. The macroeconomic environment, with its persistent inflation and higher interest rates, puts additional pressure on unprofitable tech companies, making it more expensive to fund operations and raising the bar for demonstrating a clear path to positive cash flow. For those managing their investments through platforms like Fidelity Investments or considering a robo-advisor, the risk profile of a company like BBai is a significant factor. Now let's turn to the future outlook, where the expectation versus reality framework becomes even more critical. The bull case for BigBear.ai rests on several potential catalysts. A significant acceleration in the conversion of its backlog into recognized revenue would be the most powerful driver. If the company can demonstrate that its recent earnings miss was an anomaly and not a trend, investor confidence could return swiftly. Further expansion into the commercial sector, leveraging its government-validated technology, presents a substantial growth opportunity. The recent partnerships in aviation security, cargo management, and even professional sports suggest this is a key strategic priority. Successful execution here could dramatically alter the company's growth trajectory and valuation multiple. I want to hear from you. Comment below with your thoughts on whether BigBear.ai can successfully pivot and scale its commercial operations. Conversely, the risks are equally potent. The reality is that the company faces intense competition from both established defense contractors and a burgeoning number of agile AI startups. Its inability to achieve profitability remains a significant overhang, and further share dilution to raise capital could continue to put pressure on the stock price. The reliance on government contracts makes it susceptible to shifts in federal spending priorities and budgetary constraints. If the company cannot demonstrate a clear and credible path to profitability in the coming quarters, the market's patience may wear thin, and the narrative could shift from a promising growth story to a cautionary tale of unrealized potential. Analyst ratings reflect this dichotomy, with a mix of buy and hold ratings. While some see the massive backlog in strategic partnerships as reasons for optimism, others are lowering revenue forecasts and pointing to the significant valuation discount compared to high-growth AI peers as a sign of underlying weakness. In summary, the story of BigBear.ai is a fascinating case study in the collision of market narrative and operational reality. As of this moment, the stock is experiencing a surge fueled by high volume and the market's insatiable appetite for anything related to artificial intelligence. The expectation is that BBai is a key player in a transformative industry, poised for explosive growth. The reality is, however, a company grappling with the challenges of profitability, shareholder dilution, and the complexities of its government-centric business model. The recent earnings report served as a stark reminder that a compelling story and a large backlog do not automatically translate into financial success. The path forward is uncertain, laden with both significant opportunities and substantial risks. Investors on platforms from interactive brokers to Robinhood must look beyond the .ai suffix and conduct a sober assessment of the company's fundamentals. The true test for BigBear.ai will be its ability to close the gap between its ambitious expectations and its current financial reality, proving it can not only win contracts but also execute them profitably and consistently.